Good morning and welcome to today's edition of the London Session Open. Today is October 8th, 2019, and it's almost 7:30 a.m. in London when I'm doing this market update. We're going to take a look at the markets. I'm going to talk a bit as well about the Turkish lira. Big move yesterday following comments by President Trump. So we're going to talk about that, but we will first begin with the Euro USD, talk a bit as well about GBP, and then dollar yen, and gold, crude oil, S&P, and German DAX, and then we'll talk a bit about the Turkish lira as well. I'm hosting a special webinar. I haven't hosted an educational webinar for quite some time actually, and we're hosting one this evening at 6 p.m. London time, and I'm going to talk about trend trading versus range bound trading. And a part of the range bound trading, I'm going to introduce you guys to a new trading style that I've been investigating and used myself, and hopefully it can come useful for you guys as well. It has done quite a good job over the recent weeks, and it looks like the system itself has been going quite good in the past as well, and that's why I started using it after a bit of forward testing. So we'll talk more about this evening. If you want to find that link, it's actually underneath here in this YouTube video, in the description. As well, you can just go to my Twitter at AlexFX00, and you're gonna find. I'm gonna put this link on top, and you can just. This is the link here to be able to register. To go to my Twitter is AlexFX00, and I'm gonna pin this one on the top so you can easily find it. Okay, let's begin. All right, so over the last few days, we talked about buying on the break to the upside for the market to go up to higher levels. You got the next high in the euro dollar, which is 110.23, and then you got the inverse and shoulders target at 110.51. Moved upwards and then went down and then up and then down, up and down. And yesterday as well, we're pretty much trading here. I said we're probably gonna go up, which we did, and then went down and going up, but the market really struggled to trade upwards. And this could be an indication that when we reach these levels, people want to sell. And in general, I do think that, of course, like the US economy is under a bit of pressure, but I think, again, they have positive interest rates, whereas in the euro area, they have negative interest rates. And reading economic indicators from the euro area continue to be soft. So I do think this market will continue to go lower eventually, trade to new 2019 lows, but for now at least the trend is bullish and we can go up. But this is a bit of a warning sign that maybe it doesn't want to go all the way up, and I think soon I will probably be able to put the trend funding level here, and then when we take out this level, the market might just tumble. But for now, the trend funding level remains here, which is the October 3rd low. And as long as trade above that level, the trend is going to be bullish. But take this out, the trend turns bearish. By the way, about these situations, you don't actually have to trade. You know, when I put two lines like this, you don't really have to trade both sides if you don't want to. Because I am predominantly longer term trader and I want to keep positions for a few days. I just want to get an entry on and then just focus on other stuff. I don't want to babysit the position. I will usually not trade counter trend moves. I will rather just wait for the bigger picture, to the short-term trend to align itself with the bigger picture. And then there's more, of course, to it, and that's what we're going to talk about tonight. All right, here's GBP versus the USD, and the market is in a downtrend. So the long-term scenario, as you know, was to sell in this little zone here, and then I had a shorter-term scenario, which was to sell here. Still looking all right. You know, it's nothing bad, booking better profits here. I do think we will trade lower, and I do think if we go up to 123.86 that people are going to sell, and as long as trade below 125.07, which is this high up here, then this trend will remain bearish, then we can trade down to something like 121 or something like that. Dollar versus the Japanese yen. Okay, so stock markets are quite bullish and upbeat. I still think though that the dollar yen is going to trade lower. As you know, I've been bearish from this level here in the short term, and the bigger picture I've been bearish from up here, and we're very close to reaching 107.53. We can actually push this down to the 50 level, and I think if we touch the 50 level, I think people will try to short there again. No reason to change our outlook, I think, as long as we're below this level, which is as high from, it's actually September, well, yeah, let's just make it October 1st. Moving along here, not Brent crude, this is West Texas crude oil, and West Texas crude oil is bullish, and we bounced nice from this level. This whole area here was a buy zone, and I think for now, if you look at it from a 1 hour time frame, it does look like it wants to trade upwards. I think you have a bit of a bullish bias above this low here, which is 52.04. So it goes down and then slowly goes up, and I do think it will go up. Now, this is always the challenge. Unfortunately, there's no easy answers with trading, but if you're scalping trading short term, it's sufficient to look at 52.04. If you're looking at slightly longer term, then the stop was still need to go below 50.89, 50.59 down here. So if we do attack this, even if we take out that short-term level and we attack this, as long as you trade above this level, I think people will look to buy. And I think I shared this one with you, that it was to buy down here for this to go upwards for a 3 times residual ratio. This is gold prices, and I've been bearish here for quite some time. We moved up, and even ahead of the non-farm payrolls, I said this is probably going to go down. And the reason for that is that we're dealing with a bit of a downtrend. Then the non-farm payrolls is not that bad. It was not great, but it wasn't that bad as the market projected. The market economists said we were going to have about 140,000 jobs. We had about 130 or something. And the prior number was revised upwards. So from that perspective, non-farm payrolls beat expectations. But if you were looking at Twitter, what people were saying and thinking, and the way they were positioned, with the market rallying strongly, they were positioned for a non-farm payrolls closer to 100 maybe. But obviously the reading was not 100, and it was not that bad overall. So you're seeing here a bit of profit taking. My idea was to sell up here, but we went up here on the 3rd, which is Thursday, but then I had to push this down here. So unfortunately we missed out on this little selling opportunity. Now I think we can lower this a bit like this. And I think we can lower this a tiny bit as well. It's not the best of opportunities, but I reckon it can probably go up and then probably down. I think we're gonna test 1480 as we talked about a few days ago, and I also wrote about that on Investing Cube. And I think if we swing up, people are gonna sell again, and then we're probably gonna go down, and then we'll see what happens. At one point, I mean, it looks like this is the next major high, so, or next important high. And I think if we take this out, we'll probably resume the uptrend. All right, here's the S&P 500, and the trend is bearish. It's bearish below the October 1st high, and the market bounced very nicely, but moved up quite aggressively with just below support. I think as a minimum, we need a bit of profit taking here, and then probably going to go down here to 2912, and then maybe 2,900, and then maybe from here, people might look to rebuild long positions. My preference, though, is that the thing tumbles all the way down to this trend line and to buy down here. In either case, I think short term, slightly overbought. I would not be buying here. I would, if anything, I would be selling to book profits. And if you're really bearish, then this could be something as well. German DAX is tumbled in, took out this level, is now at the little sell zone, and as I said, as long as trade below September 17th low, which is here, this trend is going to be bearish. I think the way this looks like, it doesn't look like it wants to roll over immediately, and RSI and as well is not even properly overbought yet, but I think we can go up a bit more and then probably lower. Finally, what's going on with the Turkish lira? So President Trump put some tweets out yesterday that he would obliterate Turkey if they would do anything bad, as the US is um, withdrawing from northern Syria, and as per the news, Turkey will now be most likely entering those areas. And if they do anything bad, President Trump said that in his unmatched wisdom, he would find out about that, and he would liberate their economy, not Turkey the country militarily, but the their economy. And what he's talking about is just that in the summer of 2018, there was a pastor called Pastor Brunson, which was detained in, who at the time was detained in Turkey, and the US wanted him released, and they imposed sanctions, and that caused Turkish lira to rally strongly, as you can see here. And what happens is that, and the Turkish lira, however, though, has been in a downtrend for years, as you can see here. Moves down here and rallied with about 400%. So they have had massive inflation, and this is because of the currency weakening. And now finally their economy actually started to turn around, partially due to lower inflation and partially due as well to interest rates being lowered. But obviously if this goes up again here, as it already started, and that could hurt the economy. Now they haven't done nothing bad yet, so I think realistically this goes down to something like 575, 570, and then we'll see, because this by itself was definitely enough to kickstart a little trend like that. But macro fundamentally they haven't actually done nothing yet, so I'm not sure one should be taking positions on right now. I think it might go up a little bit, but then 2-3 weeks from now people will forget about it and we'll trade back down here again. So I will be careful here. If you do want to engage, the trend is bullish, and I think if we go down to maybe 574, maybe down to 568, some people might buy it. But again, it was just a comment of what may happen if something bad happens. Nothing bad has happened as far as I have. No, because I haven't even started yet. So this is something that just quick reaction, and I think that's it. Okay, guys, thanks so much for watching, and I'll see you guys tomorrow. Don't forget to join me as well for the video today at webinar today at 6 p.m. and as well on investingcube.com. Have a great day. Thank you.